How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar EU. As we can see, we talked about in the previous episodes, coming into this last week of the month, we're most likely going to get the high of the month. Now, I'm not saying we know where the high of the month is going to land per se, but we know that in a bullish month, more than likely the close of the candle is not going to be exactly at the high. It's going to be a little lower than it. Sometimes it is the exact high. The close is the high, but more times than not, you'll see a pullback off of the high of the month and it closes lower than the high. So we can see the high of the month is up here. What day is it? Either Friday or Monday. They look like equal highs. Let me double check. Who's higher? Monday. So Monday's higher. So Monday's the high of the month right here, the 26th of August, 2024. We talked about how we took that long position. We were happy with compounding our account this week. Correction, this month with this little swing trade that we took here. Made 3% on that on the account, and then we're going to look to do the same thing moving into next month. Now, this smash signal, right, this sell signal here was triggered and was triggered on Wednesday. Just triggered it here, and now today, Thursday, continued to sell through. So you can see how the daily chart can leave signals for traders to understand whether or not the market is going to make a turning point, and this is a turning point. We can see that this swing point is a part of a swing formation. Correction, this smash candle is a part of a swing point. So it's 1, 2, 3. I know these candles look like equal highs, but they're not. Zoom in. This candle is just slightly higher. That's the high of the month. But notice how in that turning point, there's a smash signal here. This large up candle to the upside. We said that it might likely trigger a sell signal, and it did. And if you were a trader that got into that and speculated that, and you got in, you would be profitable right now as we're speaking. Now let's compare the EU to the rest of the other pairs, the other majors like GU, AU, NU, and even the DXY. Let's move on to GU. I'm doing good, man. I appreciate that question, my dog. Someone in the chat just asked me how I'm doing. Doing good, bro. I'm just grateful for life. Trying to be as humble as possible, bro. Life is something that could pass you by if you're not really present, you know? People just go through the motions, and you got to really be present and understand, like, man, this thing is short, bro. This thing is short. So I'm just happy to see a lot of family recently. I haven't been as consistent as I wanted to because, like I said, we had a passing in the family. So everybody was coming together, sharing that love and just trying to appreciate each other and catch up. But thanks for asking, man. I appreciate that. I really do. So GU, as you can see, is directly correlated with EU, right? When EU goes up, we should more than likely see GU go up. If GU goes up, we see AU go up. If AU goes, we see NU go up. And vice versa, anything that's not correlated should go down. So we saw all the dollar crosses were bullish this month. And as you can see, there was a sell signal here too. You see that with GU? Sell signal right there. I think someone mentioned that earlier in the Telegram channel, that there was a sell smash candle theory here for GU, which they were correct. This is a sell signal. You would have been profitable for 2 days. It looks like there's a pullback. You're right back at basically your entry. Let's move on to AU. AU still pushing higher. So you can see the high of the month has not set in yet for AU. It's still trending up. So maybe Friday is going to be the high of the month, or even Thursday. Maybe Friday pulls off, and Thursday is going to be the high of the month. But there's no sell signal here via smash candle yet. This technically would be the smash candle, but I would expect another sell signal to form higher than this candle here. So until price gets back to this candle's high, handles low, this would be the sell signal. Let's move on to NU. Same thing here. NU still hasn't sold off or made the high of the month yet. This right now is the high of the month. Maybe Friday it comes up and takes out that high. But notice again, direct correlation here. All these dollar crosses were bullish this month. After every down close candle, there was a buying opportunity, or every other down close candle, there was a buying opportunity. Very simple ideas that we use to allow ourselves to get into trend with the market once we figure out the speculation and where the market's going. Now let's take a look at the DXY that's inversely correlated. As you can see, we're selling off. After every up close candle, I had these arrows here for the paid group. We were talking about counter trend candles. After any up close candle, possibility of a selling opportunity, right? You want to sell in a up move. When the market goes up, you want to sell if the speculation is that you're going to be bearish. You take that risk, you manage that risk, and you go short after up days. And we can see 1 day goes up, there's a short. 3 days go up, there's a short. 1 day goes up, there's a short. 1 day goes up, there's a short. 1 day goes up, there's a short. And then we have a smash candle theory here. I want to see if it triggered it. It just did. So that candle, move this over one. Yeah, it just triggered this smash candle buy, and it pulled off of it pretty strong during that news, right? We had that housing market news, right? The pending sales of U.S. homes have hit a record low since the pandemic, right? We're living through historical times right now, people. I don't think people truly understand that what we're witnessing has never happened in history before, right? Gold hitting all-time highs, stock market hitting all-time highs, right? U.S. oil hitting zero, right? Back during COVID, you guys remember when U.S. oil hit zero per barrel or even negative per barrel? That was insane. What else has happened? We had a total world lockdown, right? Now we have major wars going on, right? Minor wars, major wars, huge things going on. Things are chaotic. Things are not as it seems. So be careful trading. Today's the last day of the IPTA look back data range for the cash forward. So you can see every 20 days, the market's going to make a move. That's how I like to keep it very simple for myself. Every 20 days, the market's going to either be seeking buy side liquidity pool, trending up, or sell side liquidity pool, trending down, or it's going to be accumulating for the next 20 days. Now, this is a rhetorical question, where you answer this on your own. Which trend would you rather be in? We all know which one it would be in. It would have to be a trend that moves, not a trend that's stagnant and moving sideways. It's unfortunate, though. There are times where you may pick a pair for the month, right? Let's say you're focusing in on one pair for the month. That pair might consolidate that month. That's just a risk. But if you figure that it's being, lethargic and not moving, it's very sluggish, then shift over to your second best pair that you filtered out for that following month or the month you're going into. And you go with that. So you go back to EU, and we can see simply what was happening here was higher highs and higher lows. There's no need to use fancy terminology, right? Offset distribution, reaccumulation. We don't need to talk about those things. The market was making higher highs and higher lows. It's a pretty clear structure here. This is beautiful price action on the daily chart. So if you weren't able to take advantage of this month, please buckle down next month, sharpen up, look for those ideas. Price breaks a swing high, that's most likely bullish momentum. Price breaks a swing low, that's most likely bearish momentum. Look for the next confirmation. Do we get a higher swing point or do we get a lower swing point? And then take the trade in that direction. That's what we did here this month for EU. We waited for price to break a swing high. We waited for the next higher swing low. After that, what I simply used was the next down close candle to go long. And I held. And I held to what? Some type of buy side liquidity pool that was outside of the IPTA range. Just because price is outside of the IPTA levels does not mean price is done seeking liquidity. I've never once said that. Price is always going to seek some type of level of liquidity via swing point. And here it ran up to this swing high that was formed in 2023, Thursday, December 28th, right there. Hit that, and now it looks like it's going to change trend again. The market may sell off going into September. And many people have already asked, what are we trading next month? We're going to get to that tomorrow during Forex Fridays. Probably going to have it around 8 o'clock, I would say, 8 o'clock sharp or 7 o'clock sharp. If I have time to start it early, I'll start it earlier. And we'll go through the pair filtering process briefly. And I'll tell you what pairs I am selecting for the new month. Hint, it is not going to be dollar crosses. It's not going to be a dollar cross that I'm most likely trading next month. It's going to be a different cross, and you guys probably already know what that is. So hopefully you found this insightful. Let's take a look at intraday today real quick and briefly. So today's intraday, we can see accumulation, manipulation, distribution. This was where the smash signal was triggered, the sell signal there. It pulled back, and you can see it runs right through it, giving traders some type of profit on that sell signal. But if we take a look at the London session, you can see there's probably a long idea. Sorry, correction, a short idea. I'm always saying things backwards. There's a short idea. You see price runs above the Asian session high. They find their short, and it continues to break down. Now, for those that know, when you get a tight Asian session, you can utilize the Asian session range to help you get into the market with sell stops or sell limits. Now, let's say going into this day, Thursday, you was a seller. I'm not saying you was, but let's just say today, going into London, you were going to be a seller for EU. How could you approach that with a Asian session that's consolidating? Well, there's two ways you can approach that. You can use a sell limit and a sell stop at either the Asian session high or the Asian session low. Now, I would prefer the sell on strength, meaning the market's going up and then I'm looking for a short. I don't like to sell on weakness, meaning the market's going down and I'm selling with it. I don't prefer that. I prefer to do the opposite. If the market's going up, I'm looking for shorts. If the market's going down, I would leave it alone and look for probably some type of pullback, then go short. That's what I will look for. But if you're using the Asian session high and low, it's the Asian session low. Right? This is a utilization of the Asian session range. And we got the Asian session. Oh, one more candle. Is that it? Yep. There we go. We got the Asian session high. So 8 p.m. to midnight. Play it forward, play it forward, play it forward, play it forward, play it forward. And you can see here, look, price runs it out. There you would look to go short. You use a sell limit order right there. Use a sell limit order, and how would it look? How would you frame it? You're going to go short here. Now, when I use this idea of utilizing the Asian session range, let's say I don't have time today, but I still want to get a trade in today, right? Everything is lining up. I did my speculation. I don't have time to sit down and watch London. I don't have time to sit down and watch New York session, right? Many people are busy people. You got kids, you got a business, you got a job, you got other dependents on you, right? What I would do is I would go short and have a stop loss of anywhere for 20 to 30 pips, right? With the sell limit order. And I'm looking for the same thing for a one-to-one scenario. So it would look something like this. What am I doing? This is what it would look like. 30 pips for 30 pips. That's what we're aiming for. If I'm utilizing the Asian session with my limit or stop orders, that's how I would do it. And I'm looking to go short there. Now, keep this in mind because there's another idea I want to show on top of it, because everything is fractal and everything's comprised of one another. The London session model happened today. Now, I don't know if it truly did happen because I didn't look at it live because I'm sleeping in New York. I don't trade the London session, but I do know that these ideas do show itself. So keep this in mind. There's a short idea based on the Asian session utilization. So let's hide this. Let's get rid of that. Let's take a look at the London model. So we have a dead zone here from midnight to 2 a.m. here and here. We're looking for buy side and sell side liquidity pools in this market here. Now, we're going to look at it via 15-minute chart. Now, the sell side that we have is here. That's the sell side liquidity pool, Asian lunch. And then we have the buy side, which is up here. The buy side is pretty high up here, honestly. And we would suspect if we're going to go short, we would want price to run up, take out the buy side, and then go short. But there are times where we don't get the breaker, right? We don't get the break of the high, then go short. Sometimes we get the mitigation instead. You get a mitigation, price fails to break that high, then it goes short. Let's play it forward. See, price takes out sell side instead. Let's go on the 1 minute time frame just to view what's going on here. That's London here. London session. Look at the very first fair value gap to the downside that it forms here. Price trades into it and it's going short. Let's play it all the way through. And look at how London went from being above the Asian session high, now back down to the Asian session low. Now let's put back on that short idea. Do you see how we could just, we have to just glance at the chart real quick, set an order and leave it and forget it. Set it and forget it. We don't have to sit here and watch London all night. We don't have to. As soon as the Asian sessions finish forming, we put that order in and we could go to bed. We could go to work, do whatever else we got to do, continue what we were doing, right? And we don't have to sit here and watch for the intraday setup. Now, unless you have the time as a day trader, right? You're a full-time day trader. You don't have any other obligations. You can sit here and look for London and look for the pinnacle of all sells, right? You're looking for a very niche idea. That would be the first fair value gap that forms after running some type of buy side here. Price runs buy side and then it goes short. Continue playing it through. So going. Get rid of this and get rid of that. Let's keep playing it. And this is where we are currently in price. So you got this little retracement that's happening here. It's now currently 12:30 p.m. 12:30 just the 30-minute candle just opened. It's 12:30 p.m. in the afternoon in New York, and you can see the London close. Again, the London close. You sell stop or sell limit, you meant. It's confusing. Okay. So a sell limit is when the market goes up. When the market's going up, you can set a sell limit. It's getting to a certain point, a high point, and it's going to trigger you in the market to go short. All right, just answering someone's question in the chat. A sell stop is here. You would use a sell stop here. So I'll write it on the chart for you. Sell stop order. Right, you're selling on a stop. It's going down, so you're selling on a stop. It's going down there. You would sell here on a sell limit. Hopefully this makes sense to you now that I have a chart. So one of them is selling when the market's going up. The other one is selling when the market's going down. A buy stop. Yeah, we're not using no buy stops because we're looking for shorts. It's vice versa. So if we take the same idea that we're talking about on the daily chart, for instance, let's go to the daily chart real quick. There you go. Buy limit order. See that? Buy stop order. That's how I was able to catch that long here for EU. It's the same thing I'm trying to show you for the Asian session model. Sorry, the Asian session utilization. I'm using a buy stop order or buy limit order, but I would prefer, like I just said, if I'm looking to go short, I rather sell when the market's going up. That means vice versa. If I'm looking to go long, I rather buy when the market's going down. I can't answer this, shorty. I'll have to call you back. Price is going down. I'm going long. That's how I'm doing. But you can do both ends. Why are you calling again? I declined your call. Sorry, but I'll have to call you back. Dang, you calling again? Hold on, guys. Give me 1 second. I got a text. Shorty. Can I call you later? All right, cool. She should get that message. All right. Buy limit order because I want to buy on weakness. Buy stop order. You can do both preferably. It's totally up to you. But me specifically, Deontay, I'd rather buy on weakness, the market going down, and then I look to go long. If you are looking to squeeze a lot more out of the market, and let's say you missed this order, right? That's the point. It's so flexible. Trading is a very multi-dimensional um, style of trading. You can buy here too, and you can buy here. Same thing here. You could buy here, and you could buy here. You see how that day would have been profitable after those down days? Now, I'm not saying every day is going to work out perfectly like that. You're going to have some drawdown. That's why I have a stop loss, because I could have brought after this down day. This trade idea was literally no drawdown. This is honestly a 10 out of 10 trade. But you're not going to get a 10 out of 10 trade every single time like this. This comes once in a while. Sometimes I would go long here, and it would pull me into drawdown. I'm anticipating drawdown. I know that there's most likely going to be drawdown. But that's what I'm trying to show you here for the Asian session. Let's go back. That's what I'm trying to show you here. You're selling as soon as it hits that, you're selling on weakness, and you're looking for price to go lower. Here you're selling on strength. Here you're selling on weakness. The sell stop order is selling on weakness. The sell limit order is selling on strength. All right. Hopefully that makes sense and clarifies that for you. New York session gives a continuation to the downside. There's probably some type of actual trade entry. There's some type of retracement and an expansion lower, taking out that London low that it posed for the day. And in London close, you can see it gives a reversal. You check the Telegram channel, I was showing a sell signal for UJ. When that news dropped around 10 o'clock, I figured that news was not going to be positively great for the DXY. So I went short on UJ. And we can take a look at that briefly too. Take a look at this. Let me know if you guys have eyes. The screen should be split, and you should see DXY on the right. And you're going to see UJ on the left side of my chart. Now, 10 o'clock dropped. I saw price run the New York session high. Here, ran out that New York session high, and I looked at this candle as a smash candle signal. Same thing that happened on the daily chart for GU and EU is happening here on the 1 minute chart. It's so fractal. This candle, where's the replay button here? This candle here closes above many highs. Same thing on the daily chart. It would have, let's pretend that this is the daily chart. Pretend that instead of this being 1 minute candles, 60-second candles, this is a daily chart, right? A 24-hour candle. This daily candle closes above all these daily candles here. This looks to retail as very bullish. And I like to go opposite to the retail traders. All that commercialized education that these people try to get people to learn, the retail logic, the patterns, the candlestick stuff, all that stuff is garbage, in my opinion. Some people may be profitable using it, but in my opinion, it's garbage. This is where I'm going to go opposite to all that commercialized education. I would go short, but other people might look at me and say, why would you go short here, Deontay? That doesn't make any sense. That market looks bullish. But we can see now that that idea wasn't nonsense. It actually was a signal. And I was able to go short in a premium of that kill zone. I went short in a premium above the London close kill zone. So there's one more kill zone. So you got the Asian kill zone, you got the London kill zone, you got the New York kill zone. And then if you guys are versed in ICT, education or material, you know there's a London close, 10 a.m. to 12 p.m. And it's characteristic, listen to what I'm saying closely, the characteristic of this time period of the market tends to be opposite of what the New York session does. The New York session gave a bullish continuation pattern. Pushed up. If it's going to be opposite, that means it's going to be a sell signal or some type of trending model to the downside for London close between 10 o'clock and 12. So you see, I'm already putting a lot of layers on top of it. And then I took my shot. And we also had what on the left side? A lot of traders tracing these longs. We had tons of traders looking to chase UJ after that news event at 8:30. 8:30 comes out and price shoots up very fast. What happens? Retail is probably chasing this. What happens as well? We have that retail logic. We have a bull flag. This is a bull flag. It really it makes a lot more sense around here. When I was looking at this, I was like, oh wow, it looks like a bull flag. And I was telling myself, oh, this is gonna get filled in. I was like, retail traders are probably looking for it to go break, retest, go long. So you got your pole and then you got your flag, right? Not drawn to scale, of course, but this is what retail traders look at, right? So subjective. So retail traders got the pole, they got their flag, they're waiting for it to go here, get tiny, 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 break, retest, go long. Now, I'm not saying that this pattern, this retail logic pattern, does not work once in a while. It probably does, and there's probably examples people can come forward and show me, like, hey, look, I found the bull flag and it works here, or I found the bear flag and it works here. Cool, but I'm gonna fade that retail pattern. I'm gonna fade it. I want to see price break up and then go short, and that's exactly what happened here. That's exactly what happened here on that bull flag. Play it forward, and like I said, it ran up one more time. And all those retail traders here, now they're going long again. They're going long, 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 long. Full margin. They're blowing their account because they think this is the home run trade. I always talk about it from the worst case scenario. I'm exaggerating, of course, right, to get my point across. And what happens? All those retail traders go in long and price drops and it goes short. And again, I am looking for a quality entry based on my speculation. So even if my speculation was wrong, it still was a quality entry. Let's say I took this short and it still hit my stop. Excuse me. And it still hit my stop loss. Was my entry still valid? Yes, because I sold above that kill zone's opening price at 10 a.m. 10 a.m. opens. This is the algorithm's new premium and discount levels for the kill zone. You can see how the algorithm pulls the price down in the discount below the open and finds some type of buy. Now, I'm not saying I would be able to predict that buy and what I'm looking at, but that's not what I was looking at anyways. But in hindsight now, you see how the market pulled it down cheap and found a buy and made a swing low and then pushed it all the way up here. And then I waited and I stalked. And the best time to sell is after breaking a high. Now, others may say and debate me on this. They may argue, well, the best time to sell is when price fails to break a high. But I think that one is a little hard to see. I think it's very clear and objective when we all can agree, okay, this is the New York Sessions high. So it's an objective measure in time. So since it's an objective level, we know there's clearly buy side liquidity up there. And it's clean highs, relatively equal highs. I even marked off down here. We have clean lows. What did ICT tell new traders to look for when trading, when learning how to trade? Look for clean lows. I said, wait a minute. We had clean lows right here. Look at how the market is manipulating, right? Holding itself here, reaccumulating orders right here because we have this huge busy to the upside. Price reaccumulate, it traded down into it because at first it would have looked like this. But it traded down into some of it, so that's why I readjusted it to look like that. It partially filled in some of that busy. It's just still open. But I said here, that's very odd. They fill in a partial point of the busy, then push price up, and it's multiple levels being respected here. Okay, the algorithm is most likely going to come back and seek this level. So I took the trade idea towards that low. That was my projection. See how I'm framing it? I know many people may frame it a little differently. It's a little subjective when how you frame the levels, but this is an objective level. We can all agree that's equal lows or clean lows. And I sold right after the price broke that high. I waited for that up close candle. That's the smash candle. The entire candle is a smash candle, but I'm selling at that candle's low. As soon as it crosses that low, I went in short. Went short and I held. Then we also have the IFVGs on the flip side, right? Some people might even say, oh, there's a BPR in the area, or there's also a breaker in the area. You can there's many PD arrays in this area that we all can see. There's a volume imbalance right there. There goes the breaker here. This last down close candle before the rally up and then the drop down. Let's draw it on the screen. Here, here. Breaks it. Here, goes short. There might have even been, double check, might have even been some type of fair value opportunity. Nope, it fails. Doesn't even get back. So that idea doesn't work. But you see how simple ideas can lead to great, rewarding ideas? Very simple. I just waited for a high to break. The news just dropped. What do we say about the news? Right? What do I tell the community that the news is? I say the news is the excuse to move price action fast. That's all it is. I don't care about the data per se. I know today I mentioned, oh, the U.S. home sales hit a record low, and I said, oh, it would negatively impact dollar, and it did. I figured it would, but I don't care about the news. I really do care about the price action and the time that we have available and what liquidity pools we have in the market. The news dropped and it took out buy side. So what do we have left? Sell side, some type of sell side, and that's what I did there. So hopefully you found this insightful today. Let's bring it back to EU just to recap one more time before we end. Let me get rid of all of this off the chart. All right. This was a fantastic month to trade, and we'll talk about it tomorrow again for Forex Fridays. We'll go through the whole thing. We'll have a couple themes to talk about and how we could study price action, but this is what a bullish month looks like. Study this material. If there's any questions, please let me know now, or forever hold your peace till tomorrow. It's been a pleasure. Yep, next Monday, September. All right, I think we're good. I don't see nobody asking any questions, so we should be solid. Let me double check one more time. 6 new messages. All right, we're good. All right, folks. Take it easy. Don't trade. Do not trade till next month. It's okay. New month is going to start. New beginning. Peace.